This is my full investment breakdown of my portfolio at the age of 22. I'm not showing this to flex, I'll actually cover up the numbers. I'm showing this to prove you guys how much of a return I got just by using these simple step-by-step strategies. I wasn't even trading, I wasn't chasing returns, I was just putting my money into the market on a more consistent basis. More specifically, ETFs and good companies like Apple, Google, and Pepsi. So here's my portfolio in a nutshell. So at 2023, I was at 0% return. So we'll use that as a baseline, right? And I started investing consistently as much as possible, as consistently as possible. And now going into 2025, of December, I have now increased my investment account to almost 1,000%. So this is now what? 978.31% increase. It's almost at an 11x boost just from those almost 3 years of consistently investing. Now that's not even 3 years, that's almost 3 years. And that's not even 4, which is like the even number. So imagine 4, 5, 6 years from now of investing something like this in place into my portfolio. But that's my investment portfolio performance in a nutshell, basically, for the past 3 years of consistently investing. Now let's take a look at my holdings. Now it's nothing to look at here. I'm not day trading. I'm not picking out the right stocks. I'm literally, most of it's in mutual funds. So just to keep in mind, those increases in return, yes, it's from the stock market doing really well and me dollar cost averaging. And if you don't know what that is, it's basically when you buy a stock or an ETF or a security at a consistent basis, whether it's going up, down, sideways, roller coaster, whatever the fuck it is, you're still putting that effort in. Mutual fund is most of my portfolio because I have my 9-to-5 job and it automatically invests per paycheck into that kind of mutual fund, which is why it's at that 45% right now. And then what I am doing is investing a lot automatically into equity. So these are securities like Google, Microsoft, Pepsi, mostly dividend stocks that I've been investing in terms of equity stocks, and also dividend ETFs and high regard ETFs like VOO as well. I am now starting to invest in Bitcoin. As of recently, it is dipping. As of right now, it's around $80,000 or something like that. But I have almost 2% into crypto, which is all of that is contributing to my 1,000% increase in returns from 2023 all the way to 2025. Now, with this strategy, I did not change a single thing. I did not pick out the right stock. I just picked the ones that are good companies that I just invested in. It just made it so it's increasing, right? All these good companies, whether they're going down or even going up slightly, in the end, they're still going to be increasing due to the fact that one, inflation, and then second, their company is doing so well over a long period of time that their stock price increase as well because customer demand, supply demand, all those things. Even when the economy is doing bad and the stock market's going down, I see it as an opportunity because it's a discount. So just buy more of that, which increases my chances of me just going up in terms of investments. These are all the stocks and ETFs that I've been investing in. Now, this is just the performances of today, but these are high moving performances that I've been tracking for the past 3 years. You probably know most of these stocks already, and you do notice that Pepsi, SPY, AT&T, Coca-Cola, those are the stocks that I'm mainly contributing to on a more consistent basis since they are dividend stocks. And with those dividends, I put those reinvestments back into it once I get that payment every quarter or every month. Apple, Google, I do have a lot more here, but these are just the high performers. These companies do really well. These good companies. I have also Bitcoin as well, mainly heavy players of ETFs such as VOO and VTI, which are doing really well right now. Yes, they average about 12 to 14% per year of increase, but it's still really good to have. It's still really good, especially when you're dollar cost averaging, investing month over month. Now at 19, my investments were really small. At 20, it was still really, really small. But then I started to hit the 5 figures. So going into my age of 21 and going into 22, at the age of 22, reaching a lot more than where I was at 19, using the effects of compound interest. Now, I don't want to carry a lot of cash on me. I want to still invest in not only my business adventures, but also just these passive things that, you just set it and then you forget it. And then you look back after 3, 6, 12 months and boom, you just 10x your investments. You 10x your money just by being present in the stock market month over month. Nothing has really changed in terms of my strategy, right? These are all just quote unquote basic stocks, but they provided a 1000x return in my portfolio, which is kind of crazy when you think about it. In the mere 3 years that I've just been in the stock market, I've almost 10x my money. I'll say people who haven't started investing yet, it's better to start right now. The best time was to start yesterday, but the next best time is to start now. So start putting in, even if it's just 10, 20, 100,000, your first $1,000 into something like VOO or VTI, you're going to do exceptionally well when you invest that initial 1,000 rather than you just having it in your checking account or even just your high yield savings account getting a 5% return every year. That's not gonna cut it due to inflation. Inflation is gonna be at your ass. Why not just take that money and yes, invest it in yourself, in your business, but also just invest it in this set it and forget it system, whether it be equities, ETFs, or even just your 401k mutual funds at work. Keep on reinvesting that so that you could have a much higher yield, not even just month over month, but 6, 12, 18 months from now, you're going to get a lot of good returns just by using this type of strategy. Behavior of consistency in the stock market is greater than, day trading or picking out the right time. I mean, this 10x return, I've already beat 99.9% of day traders, in the stock market. I'm not even that knowledgeable in those, puts or whatever those bullshit techniques are called. It's just me just setting it and forgetting it. And while I do that, I could invest much more of that time and effort into other things like learning, taking courses, doing well at my job, getting promotions, doing a new business venture. All those things that will help you grow your skill set and your income while you having this passively and growing this passively, still getting a double-digit X return on your investment. So yes, it's simple, it's boring, but it's repeatable. It's really scalable too. You can invest $100 a month, and once you grow your income, you can invest 50% more of that, so $150 a month. And not only that, you're using the effects of compound interest to accelerate your growth in the stock market. And then whenever you want to sell or whenever you want to transfer those funds into another investment, you could do that easily. My portfolio, right? My returns, it didn't come from me being smart. I'm nowhere near that, but it's just me being resourceful and having that discipline to just keep on investing month over month. So this is how I think about my investments in terms of my stock market, and this is how I approach things and got me this much results. Nothing changed in terms of what I did in terms of my strategy, except the time. I utilized time to increase the effects of compound interest. And that's the habit that came first, in which why I was successful in getting that almost 1,000% return in my investments. So if you guys like more content like this and want a deeper dive into each of what is contained in my mutual funds, equity, ETFs, when did I buy it, why did I buy it,